Yeah, it's Thursday, December 13th, and tomorrow I got family coming to town, and then it gets really busy for Christmas. So let's do a review of the Forex charts, and then I'll do as much as I can during the festive season to try and keep you updated, but I can't promise how much I'll be online. Starting here with the US yen chart, had a good rally up since November 26th. And we're rallying up to resistance level here. This is a daily chart, so this is the setup you use for intraday charts. Let's zoom in a little bit, get some detail. Here we go. So we've got key resistance level right here at 02, 112.02. Got some resistance, and it's stalling there just a little bit right now on the daily chart. The next one up, we have some resistance around 113 or so, and a tighter looking one up around 113.90. So those are three key resistance levels. Watch the yen as it rallies up to there. Any of those could give us some great shorting opportunities. Just look in the TRSI, we've got a bit of room to the upside right now. So it may pass this first one and stall up at this top one here. Just guessing that for now, just eyeballing it, up around 113.90 or so, 114 in that area. Good resistance, plus you can see that downsloping trend line, the blue sloping trend line right there. So that would, up around 114 would bring us close to that trend line. So it would be really nice if it rallied up to there, gave us some short entries for intraday. Move to the downside. Of course, above 114, this chart gets really bullish, and I wouldn't be looking at the downside. Anyway, that's the yen right now. Let's have a look at euro, US dollar. Euro has pulled back down to support right here where my cursor is. There's a horizontal blue line around 146. Got some support there. It's tested it once already. Now it's doing it today again. And this could well move down to the lower support level. You see that upsloping channel we got here on the left-hand side? Well, that channel is now broken. So now we're into more of a horizontal mode right now. And don't know how long that's going to continue, but definitely that prior up channel is gone, so it's less bullish than it used to be. Testing the downside right now, and I think it could quite easily make it down to 144. So watch if the support level right now is being tested around 46. This is a daily chart. Let's zoom into a 4-hour chart. Here we go. So we're testing the support level right here. Tested it back on December 6th, and now we're doing it again. Could well break this support level right here and head down to the next one. So could get some shorting action in the next couple of days, and then watch for support down here at 144 or so. Doesn't look like a bullish chart at all. So looks like want to look for short opportunities intraday down to that lower support level. Now we go to pound US, the cable chart, still in this wedge triangle here, upsloping red trend line and downsloping blue trend line for the short term. The red one's the long term. And we pulled back to this first key support level right here at 202 and bounced up from there. We may well meet that 202 again. If that level does break, there are another couple levels lower down, one at 2 even, and then call it 197 or so. Long term, this is a bullish bias chart. This is a daily chart we're looking at right now. If I get some weekly data in, here we go. You can see that long-term upsloping red trend line. So we haven't broken that trend line yet. If we do, we've got two support levels below there that could catch it, so watch for those. So if you're shorting intraday, be aware of those two support levels that are right there. I'll just tell you what they are right now. I told you already, it's 2 even and around 197. So if we start rallying, we break above that downsloping blue trend line, then we're in bullish mode and you can buy dips intraday. So that's your pound setup. Let's look at US Canadian. Boy, remember that long downtrend we had in June, July, August, September, October? Well, it's been rallying since then, and we've come up to our first resistance level up around here, 101 even, 102 actually. 102, and we're testing it today to the upside, which is a bullish indication. So Canadian looking bullish right now. Let's just look at a 4-hour chart, testing it to the upside, just testing that swing high we put on December 5th. And above there, we're bullish intraday to buy dips on lower time frames, say 5-minute charts, 1-minute chart, 3-minute charts. If we can keep putting in higher swing highs, higher swing lows. I'll just drop down to a 5-minute chart quickly, and you can see this chart's just starting to take off. Of course, it could stall and reverse, but at this moment, we're starting to put in an up channel on the 5-minute chart, and we're in a bullish area now, particularly if we can take out that swing high of a couple of days ago. So The idea is, as long as you're putting in high swing highs, high swing lows to buy those dips at fib levels, you'll have to do your fib studies intraday. Let's get back to the daily chart. So yeah, I'd say anywhere above the swing high of December 5th, which I have at 102.21. So 102.16. Above there, we're in bullish territory. So let's now go and have a look at the Swiss franc. US Swiss rallying up nicely, and I'm itching for this to get up to a resistance level up around 15.25. 115.25. Got some resistance there. And intraday, if we find that this little rally peters out, we can get some great shorting action. Until then, it is bullish intraday. I'm just be careful of that resistance level. See here, it's starting to take off after a little bit of consolidation on the left. Now it's taking off to the upside. So this is a 60-minute chart. On 5-minute charts, we can buy dips as long as it's in this kind of action with higher swing highs and higher swing lows on your 5-minute chart. This is 60. Let's drop down to 5-minute chart quickly. There we go. So there's that line I just drew. Higher swing highs, higher swing lows. We want to buy dips on this Swiss chart. But do be careful because overhead, let's look at the daily chart. Overhead, we've got that resistance level up there at 115 or so. Could well find some selling come into the market there, and it would be great for shorts if we can get a decent move down. But there's no sign of resistance yet. Just be aware it's up there. If we take it out, of course, it continues bullish, but that is a danger zone for the bulls. So there you go. That's your update on the Forex charts for this morning.